welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Properties. Today, we're joined with Ed Mathews. Ed is an ex-tech pro turned real estate mogul, is the founder of Clark Street Capital, a knowledgeable mentor. He's balanced his family life and rooting for the Villanova Wildcats. Ed, we appreciate you coming on today. Please let everyone know a little bit more about yourself.
Hey, good afternoon, Josh. It's a pleasure to be on the show. Thank you so much.
Yes,
Yeah,
sir.
I mean, you basically gave me the highlight, the headlines. I mean, I spent about 24, almost 25 years in working for teeny tiny companies that most folks have never heard of. And I was traveling 150, 200 nights a year, and I was missing a lot of good stuff with my wife and my two daughters. And so in 2008, a very close friend of mine handed me the Purple Bible, Rich Dad Poor Dad, and I read it and fundamentally changed the way I looked at things. And really what I came to conclude was that the only way I was going to build wealth for my family was outside of a W-2 job. And so I never really had the intent of leaving the corporate job, mainly because I really enjoyed it. But, from a time perspective, a time freedom perspective, really, it became apparent over the next several years that, I wanted to be home a lot more than I was. So I didn't have to spend, Friday nights reintroducing myself to my daughters. Because I was gone. I'd leave Sunday night and come back Thursday night or Friday morning, and that was it. Right. And so, over the course of time, our portfolio grew to the point where it supported the family. And back in 2018, actually the end of 2017, I gave my notice, and I was at a company called DocuSign, and who, if you're in this world, you probably know them. And it was about 4 months before they went public, and every single person, to a man and woman, asked me the exact same question, which was, "Are you out of your effing mind?" And I said, "This is, the right thing to do for me and my family, and my 14 shares of DocuSign stock will be okay. It's fine."
Did you participate in the IPO?
I did. Yeah.
Nice.
Yeah, it was fun. I highly recommend them.
No doubt.
So I've been doing this since full time for just over 5 years now.
Nice, very cool, and it's cool that coming from the Purple Book, it's that's the mind shift, and it's the simple thing of what's a liability, what's an asset, and if you can take that concept and apply it towards every single purchase that you make, it makes you think twice for sure.
And also thinking like a business owner and investor rather than a self-employed or employee, right? The whole cash flow quadrant thing. And, but the thing that, was a challenge, and I'm sure, folks in your audience struggled with this. I tell people when I'm doing my own show or talking, in front of a group that, I read it in 2008, but it took me 3 years to get over the fear of pulling that trigger before I actually pulled the trigger. And so my first property I bought in February of 2011. So,
but it
took me a little while.
It's building confidence up, the knowledge of building confidence up to get there, because it does. But once you're there, I mean, it's a pretty cool addiction, because now it's like, where's the next deal at? Where's the next deal at?
Yeah, exactly. It was, like we closed on a 4-unit, a 4-family here in Connecticut, and it was like, wow, that wasn't anywhere near as nerve-rattling as I thought it would be. Where's the next one? Right. And then it was voracious consummation, consuming of properties as fast as we could find them. So back then it was a target rich environment.
Well, and it's not a risk if you know the metrics and the buying criteria and the market dynamics. It's really just taking advantage of opportunities once you know how to underwrite.
I couldn't agree more. I mentor a bunch of folks locally here, and they all ask me, what do you see what are you looking for when you walk a building? And I said, I don't see wood and nails and siding and roofing and all that. I see spreadsheets. For me, this is a math exercise, and the property either pencils or it doesn't. Even if it doesn't pencil, we make an offer because you never know.
Yeah.
But we do it at a number that makes sense for us and not, necessarily what the seller is asking for, which over the last year or so has been a bit of a challenge. Because folks have been, we chase properties in the 10 to 50 unit range, and a lot of owners out there who are looking to sell still think it's 2021. And the conversation I typically have with them is, hey, I am totally fine paying the 2021 era price, but you have to give me 2021 era terms, and then we can do it, right? And so, I've had several say yes, and a whole bunch who just decided to hold on. So I wish them well.
We're submitting 3 LOIs today, and
good for you.
That's
awesome.
And like what you just said, but it's with full intent that they're going to get denied. But it's they're based off in place NOI and with today's terms.
Right.
But what you'd said, submit the LOI now, regardless if it pencils or not, because that's called hanging around the rim. If the ball bounces out of the rim and you catch the ball, it's hanging around the rim. So there's
Speaking my language.
Yeah, there's a second take where you don't. It's realistic on an investor's on our where what we would submit the LOI at. It's realistic because it's market terms. It's what it should actually trade for, and not to mention that the banks simply will not finance something that doesn't make sense. They'll make you bring more equity to the table, which more equity is more expensive than bank typically. So there's give and take, but I think that
it's a happy balance you got to find.
Yeah, and the market still has not softened up enough to meet where the market's currently at, the seller expectations, but just keep on underwriting and submitting LOIs and see where it goes. But
I mean, we typically will, when we go in, we do 2 offers. We'll do a standard financing letter of intent, and we'll do also a seller financed. Yeah. And that's where we're able to show them, hey, look, I can pay a little bit more, but you've got to give me terms to make that work, right? And so then it just comes down to pushing as much of that acquisition cost onto the seller financing, and then typically we're looking for a 60-40 split in terms of our banking relationships versus seller financing when we do that.
Seller financing is it's such a cool art form, because you're engineering the deal to where it works in everyone's favor, even as a tax hedge for the owner, or even a step down payment plan to where they don't get hit with all of the capital gains at once. But it's truly a creative art form to engineer the seller financing, and to convey it to where they understand it and it works. And you can have third parties. A lot of people don't know this, but you can have a third party servicing company service that note to where you log into their portal and it's automatically being paid. And it's just no different than an actual bank. It's just you're doing it from person to person or entity to entity, besides the intermediary, which is the bank. Right. So it's
exactly.
It saves a ton of cost on financing fees too, where you can.
It sure does. Holy cow, it does. Yeah. So, the goal is to create that, relationship where everybody understands, for one thing, because, it's the old axiom, confused mind says no. Right. So, in terms of what we do, we keep it as simple as humanly possible. There's always the temptation to make it, creative, and, if you do this, then I'll do this. And if you do that, I'll do this. And, but that tends to just confuse people. Really what I'm looking to do is exactly what you were just saying, right? I can pay a little bit more. I can help you manage your taxes. You should talk to your accountant about the opportunities that a model like this would present to you. And, let's figure it out. Right.
Yeah.
And so that's been our go-to-market for probably a couple of years now. And, I think we're closing more than my peer group. So it's obviously working, but like you said, I'm waiting for that market capitulation where we start to see properties go out, and then slowly but surely reality sets in, and they start to peel back or drop price, or something goes off market because it's under contract, and then comes back on because it didn't appraise. Right.
Yeah, exactly it. Are you all looking at just multifamily or any other asset classes?
Just multifamily. Yeah. So we used to flip back when I was doing this as a side hustle. We would flip. So I would, I'd buy a multi, we'd flip a couple houses, take that capital, buy another multi, and rinse and repeat. But frankly, over the course of time, I've had more than one mentor who said, you're not creating wealth, you're just creating cash. And all well and good, but if you're serious, Ed, if you're serious about breaking away from corporate America, you need cash flow, and multifamily is really the only way to do that.
Yeah.
Relative to residential real estate. So
it always is fun though, selling a property. You get a big win, and you're like, all right, let's do it again.
Yeah, but it's empty calories, right? Because the nanosecond they hand you that that wire hits your bank account, in order to do that again, you got to go do it again, right? Yeah. And with rental properties, every month, we are very careful about who we rent to, and it's not easy to rent from our company. But when you're in a Clark Street community, we really don't have any rent issues. So come somewhere between the 1st and the 10th of every month, the revenue shows up, and it's an interesting relationship, because it's an exchange of value, right? We are going to provide a clean and safe and well-appointed place for folks to live and be proud where they live. They're going to pay their bills, right? That's it. And so our responsibility is to treat our residents with respect, whether they're in a C-class building or otherwise. And what that means to us is yes, sir, no, sir, yes, ma'am, no, ma'am, thank you. It's our pleasure. We're happy to help. What else can we do to serve you? It's true customer service, because, the fact is, I have a lot of colleagues and peers and folks that I know in this industry that will tell you, don't treat your tenants like customers. And I vehemently disagree with that.
Yeah.
Because, the fact is that, when residents move out, it's really expensive. And so I would rather create an environment where someone moves into brand new kitchen, brand new bathrooms, brand new floors, everything's painted, lighting fixtures are beautiful, the whole thing. There's really nothing to do. And I hope they live there for years. Yeah. Right. And so, that's our focus and our goal, because here in the state of Connecticut, average tenancy is give or take about 1.5 years. So that means every 18 months, people are picking up and moving, which is a lot, right? And our average is closing in on 4 years average residency. So nice. What it does, obviously, thinking about the math again, right? A 10-unit building to the right and a 10-unit building to the left. If I own the one on the left, I guarantee you our building is more profitable than the one on the right, just because of just doing that, right? Yeah. Just taking care of our residents, being responsive and being responsible.
And there's other stuff we do, and respectful. That's huge. We are extremely critical on who we're leasing to. When you buy a property and you inherit tenants, you inherit typically the bad actors, as well as the bad form that goes along with it. So when you're changing the demographic profile of a property, it's important to just hold back the urge of just filling up the units. Make sure that you're filling it up with the right tenancy, the right demographic. If you're changing that landscape, it's going to be a little painful, because you're not filling it up right away. You're critical, but it's the right people. And it is tough when you have the right people mixed in with the wrong people as well, because that will push good people away from the property. So there's a critical moment there to where you have to be very vigilant on who you're putting in there and how the community is acting. It's just what it is. There's a balance to everything. And
there's also, I agree with everything you just said. I would also add to that there's a relationship repair that needs to happen as well.
Correct.
Right. Because the seller is selling for a reason. And a lot of times, if you're not picking it up in the inspection due diligence process, it's a human problem. It's not a physical problem. And so one of the first things we do is, and most of the time I prefer to do it, I go knocking on doors and introduce myself and help ask them how we can help and what's broken. And, when I get a list of things that are broken, or one of my guys gets a list of stuff that's broken, next day they're in, if not that day, we're in there fixing it. I want them to know that there's a new sheriff in town immediately. And some of those relationships we can repair. Some of them we can't, and that's okay. We wish them well. We give them an excellent recommendation and move on. And the thing is that, I'm looking to retain as many of those residents as possible.
Oh yeah.
As long as they can operate within the way that we operate. And, a lot of people do. Some people don't like new rules, or some people don't like rules in general. Yeah. And that's okay. Then you can't live here. It's okay though.
Community guidelines. It's and people that want to be truly a part of the overall program, they love the new things that are happening, the changes, and it just retains them for longer.
Right.
Totally agree. So where do you see Clark Street Capital evolving in the next 5 to 10 years?
So goal right now is 2025, 1,000 units. We're on our way. The last year or so has been difficult in terms of deal flow. So we got a little bit of catch up to do, but we were actually ahead of schedule going into this year. So, it ebbs and flows. And so that's the plan right now. So I'm older, I'm 53, right? So my thinking is let's get to 2025, get to 1,000 units and then reassess what the next, 5+ years look like. I don't aspire to be Grant Cardone flying around in my plane. I'd rather just hang out with my awesome wife and kids.
I prefer I'd say seasoned instead of older.
yeah it's just a little bit of gray hair on the sides. Most of it's due to the fact that I have teenage daughters, and well, it is what it is.
Definitely don't envy Grant Cardone either. He's got to put on a show everywhere he goes. It's that would be beyond exhausting. But
no one knows when I walk in a room, no one knows who I am, and I like it that way. That's okay.
And as far as growth, I compare us over here. It's like a bow and arrow. You have to draw back in order to spring forward, and to get over the last 2 years of really the FOMO, fear of missing out, because you see everyone closing around you these deals, and it's like, man, they're all trophy properties, this and that, and that they're buying them based on performance though. They're buying them at a sub-5 cap, and
and I wish them well.
And at the time, it's like, damn, it's the market's kicking ass and this and that, and selling properties based on a property down the road and what it's currently doing, but you couldn't logically make it make sense. And very happy that we made it through the time when our purchases are any weather purchases. They cash flow.
Same philosophy here. Basically our job is to buy. We buy slowly. We're disciplined. We have a very clear buy box in terms of, the types of properties and the financial models that are in place. We buy on the reality of the situation, not on what we're going to do, 6 to 18 months down the road. Because that's our money, not the seller's money, right? Yeah. And so, if we can get to a point to fairly value that property based on today's conditions, then there's a deal. Or, again, like I said earlier, if you want to offer me 2021 terms, then I can get pretty darn close to a 2021 price point. Yeah. But not everybody gets that. Not everybody's in a position to be able to do that, and that's okay too. So, yeah, we're focused on buying correctly. And if I lose out on a whole bunch of deals, I'm okay with that, because when the folks that acquired those properties, when their adjustable rate mortgage reprice, some of those folks aren't going to be able to refinance, and I'll be ready. Right.
Yeah. I think there's going to be an adjustment to market here pretty soon. I think we all see that, but yeah, totally with you. You had mentioned that you're a mentee. What kind of questions are you getting from what kind of questions are you seeing out there in the world of people that are wanting to get into the industry, and you're guiding them?
So invariably, I'm one of those people that I'm standing in line at a grocery store. I'll strike up a conversation, right? Drives my wife crazy because she's very shy, but and so, or somebody will stop me because they either listen to our podcast or saw something we did online or something. And, my face is on a lot of that stuff. And so, they'll walk up and be like, oh, I wish I saw you online. I saw you on Facebook or whatever. I wish I could do what you do for a living. And my my honest question is, well, what's stopping you? Right. And invariably, it's one of three things. I don't know where to find the money. I don't know where to find the deals, or I don't have time. And, I then tell them I'm a cheap date for, the price of a cup of coffee, which most likely I will buy. I'll spend half an hour to an hour with you and tell you everything I know about, the kind of space you want to be in. Hopefully light a fire. If some do, some don't. But, the fact is that the reason that they don't is that those three answers, money, time, and deals, really, when you start to kind of peel it back, it's fear, right? And I know that because it took me 3 years. I tell them I read, Rich Dad Poor Dad in 2008, and it took me, and it changed my life 3 years later, right? And getting over that fear is really what what has to happen in order for someone to move forward. And almost always it's just knowledge, right? It's educating yourself. Okay, if you don't understand how to create deal flow, I'll help you. And I would go listen to these podcasts and read these books. Talk to me in a month, right? And basically the job is to help them. I was very fortunate over the years, both in corporate America as well as in this business, where I had a handful of folks that threw an arm around me and either took pity on me or saw something, and either way they helped me grow. And the way that I pay them back, because they didn't want anything from me, I offered a couple of them, a percentage of the general partnerships that we were working on and all that. And they said, no, I'm doing this because I like it. Don't worry about it. And so I do the same thing. I pay it forward. And so that's how I do it.
On your real estate investing journey, can you share any lessons learned that would be valuable for us?
Yes. So I am maniacal about process and systems. I'm a techie, right? So I think in terms of process, procedures, and enabling technology. It's the way my brain works, right? And so we have when we open the doors really full time, part of what I was looking to do was convert those processes and procedures to checklists so that I could hand it off to someone and they could do it, the way I wanted it done, and hopefully, with encouragement, do it better than I did it, right? Come up with a better way. You don't have to do it my way. We just have to get it done right. And so, I'm going to tell you two stories. So one is that the only way to scale a business like this is with systems, right? You have to know the 14 things you do when you acquire a building. You have to know the 12 things you do when you're meeting a new and evaluating a potential resident. There are 27 things you have to do, and I'm making the numbers up, but there are 27 things you have to do in order when we go to rehab a property, and so on and so forth, right? And so over time, we have documented all of this stuff with videos and all that, so that, you may think we're a small company. We're, 9 people right now, plus our contractors. So, but they're 1099s. But everybody in the company, even if you don't directly work for us, knows exactly what a Clark Street apartment looks like, right? White shaker cabinets, off gray, granite countertops, satin nickel fixtures, Benjamin Moore paper white walls, flat white ceilings, semi-gloss bright white trim, and so on, right? And so they also know when someone calls in, here's how you treat them. When there's a problem, here's the way here's the escalation process you use to handle it, and so on and so forth. And so systems are absolutely imperative, and it's never too early to start, right? I mean, I was writing systems checklists, really, to-do lists and checklists for me and the virtual assistant that I hired when we were just 2 people, right? With the knowledge that eventually this job was going to be too big for me and too big for her, and we were going to hire people to do this other stuff. So, we basically created that process on the fly as we ran. Also, process evolves. Second story. So I bought a 5-family in New Britain, Connecticut, and about a week after we closed on it, my property manager called me at around 6 a.m., which I don't know if you've ever had that phone call. It's never, ever good news. And so she said, hey, turn on the news. Okay, what's going on? And turns out that the 12 unit building next door to my 5 unit was on fire. And is everybody okay? Yes, there was nobody in the building, and everybody in your building's fine. Okay. Is my building damaged? Nope, you're good. I just knew that you were going to flick on the news this morning and see the neighborhood and fire trucks, and it's not your building, it's the one next door. Everything's good. I'm actually here on site. She was amazing. And so we come to find out that the building is it was simultaneously struck by lightning in the basement in one particular spot and the roof. And arson investigators were involved, insurance adjusters were involved. I don't know whatever happened to the guy, but something was not quite right.
Something a little funny, peculiar there.
Yeah, it was just a really big coincidence that would happen, right? And it's like being mauled by a polar bear and winning lotto and then going to the beach and getting mauled by a shark all in the same afternoon, right?
A horrible day.
Yeah, it's a bad day. Well, it's a good day, but it's bad. At least you have the money to pay for the 2 maulings. But so we started to hunt down who the owner was, found him, and negotiated a deal. And because in the interim, I have a friend of mine who's a structural engineer. We walked the property, which caveat there is don't do this because it's dangerous and I probably broke the law, but hopefully the New Britain PD isn't listening. But we went into the building and started to walk it, and my friend Paul was like, "This isn't that bad." There are certain areas that we're gonna have to replace flooring systems, but structurally this building is sound. And so kudos to the New Britain Fire Department. They did a damn good job of putting the fire out, right? And so I then get with the gentleman who owns the property. He's going back and forth with the authorities and this insurance and all that. And ultimately we buy the property. We bought it for 50 grand.
Oh, wow.
Well, it was a mess. So,
Yeah.
It's a blessing and a curse. So the blessing part was, we didn't pay a lot for it. The curse part is the part of the story that I'm about to tell you. So I hired a general contractor who I'd worked with for years, and he was excellent. And until this story. And when we hire someone, they go through a vetting process. I'm talking to their customers. I'm seeing, I want to see, in some cases, if they're brand new, I want to know their financial situation. Can they afford to buy materials and be reimbursed on the following Friday? How does this work, right? Do you have insurance? Do you have
how do
workers'
you
comp?
handle buying materials? If you don't mind me chiming in, is it like cost plus 10% on materials?
It depends on the deal and it depends on the market, frankly. But typically I'm looking for cost plus. Yes.
Yeah.
And so contractors buy the materials 100% of the time.
Yeah. That conversation just got brought up here today. So I'm like, you know what, let's see what else is out there, but no, good information.
So I vetted this general contractor when we first came to a relationship, and then periodically you check insurance and licenses and all that. And the guy was squeaky clean. He did a good job and his references were stellar and he did a good job for us. So I hired him to secure the building. So when you have a fire burn building, the handful of things have to happen, right? You got to put a perimeter fence around so no one gets curious and walks it like, I did. You need to secure the doors and all the windows so no one climbs in and goes someplace and gets hurt. Yeah. And the other part of it is you want to get it weather tight as soon as possible. So he hired a subcontractor who his job was to remove the fire, damaged decking on the roof, and as well as the burned out rafters, and leave everything else. And what this subcontractor did was he cleared the entire fourth floor of the building of wood, everything, support, walls, ceiling joists, rafters, decking.
Sounds about right.
Well, so a couple hours later, I get a phone call. Hey, we have a problem. Okay, what's the problem? The back wall of the building just fell into the parking lot, fourth floor, right? And so that was 50 feet long, 14 feet tall, 3 courses of brick, a lot of weight. So first question, anybody hurt? Nope, everybody's fine. All right. Did you call the authorities? Oh yeah, they're standing right here. Okay, well, I'm in New York. So I'm 2 hours away. I'm on my way. And by the time I got there, the front had fallen in and cracked all 36 joists in the third floor. And I get out of the car and, walk over, and the building official says, hey, it looks like you got a free building. I was like, how do you figure? He goes, because insurance is going to, pay this off. I'm like, yeah, it doesn't work like that, but okay. Yeah. And so the lesson learned, I tell this story because not only do you need to vet your contractor, but you also need to vet the subs that he hires who aren't part of his company. And that is something I didn't do in 2018, and now I do every day. So that's my second story, the lesson learned.
That's well, and as long as he has blanket insurance, which he should, up to X amount, then he should be over insured.
It did work out. It did work out. Obviously that's why God made insurance brokers and lawyers, but it eventually worked out just fine.
Yep. That's and it sounds like your $50,000 piece of land worked out. Is that what it turned out to be
so far?
Piece of land?
Yeah. So we're yeah, exactly right. So we're basically going to build a beautiful new 20,000 square foot building on that, starting in about 4 months.
Nice. Congratulations.
Yeah. Thank you.
Yeah. It's almost like a movie. You have the beginning, the middle, and then the end is
the hero's
sailing
journey,
off in a sunset.
Right? I failed twice, and then somehow I persevere, and it's exactly what it is.
Awesome. Ed, we truly appreciate you coming on today. If somebody wants to learn more about yourself and learn more about your company, how can they get a hold of you?
So we're Clark Street Capital, and I'm Ed Mathews on all the social channels, Facebook, Twitter, LinkedIn, YouTube. So if you want to learn something about Clark Street Capital, you can go to our site, clarkst.com, or Clark Street Capital on all the channels. If you want to talk to me, you can go through the site, or you can DM me on any of the social channels. And you can also listen to our podcast, if I can mention that.
Yeah, for sure. Absolutely.
So the Real Estate Underground. And so we're coming up on 80, 90 episodes. I think we have 100 or so in the can, as they say. And nice. So we've been having a good time meeting, really interesting and smart real estate investors.
You're gonna have to get me on there. I love talking real estate.
Absolutely. I'm pretty sure we're doing a reciprocal, but if not, we'll make sure that happens.
Very cool. Very cool. Awesome, man. I love your journey. Love the story. Love where you're heading with things.
Yeah, it's fun. It's been a good ride.
Definitely look forward to talking to you here in the future, and we'll talk soon.
Okay.
All right. Thanks, Ed.
My pleasure.